share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I've got a lot on my mind. I've been looking at some of the metrics that are coming out of the economy, and I'm really starting to figure some things out that I want to share with you. And so we'll go through that and some other macro environments that I think are going to be really important to watch. Let's get into tonight's video. Well, welcome everyone. Well, we had quite the day. I always try to warn you folks, if I mention a number, you need to watch out for it to be hit. And there were a couple of numbers I mentioned last night, basis the S&P, and the first one was the 5150 level, and that was taken out. I said if that goes out, we could see 5100 and lower. We did all of the above today. It was a pretty dramatic day. We'll get into those details. But there's something I want to discuss. And I was just thinking about this. I worked from my home office earlier today. I was driving over here to the studio, and I was just like, I realized something, that, you know, it's an election year, and we're living in this funny environment right now. I'm looking at retail sales. It was expected to come in at 0.4 plus, came in at 0.7. They revised last month to 0.9 from 0.6. And what we're seeing here is this continuing labor market, sales, everything's wonderful. And I've been sitting here on this channel telling you for over a year, there's not going to be a recession. That's not happening. There was no banking crisis. That was a couple of banks that had issues, and the Fed discount window was able to basically get everything else cleaned up that was hanging around. And you know, so looking at that, I realized something. Powell has been finally bringing to light that the labor market is just, you know, it's amazing, very resilient, they say. Well, it's not resilient at all. What's happening is there are 8 million people walking through our southern border. And when they get across the border, I mean, they're met with government officials. They're like, here, would you like to go to so-and-so city? What city would you like to go to? Oh, New York, Philadelphia, Chicago, whatever. And they just go there, right? And they get free plane flights, they get food, they get EBT cards, they get money, they get housing. And, you know, guess what? That's a form of stimulus that they're hiding. They knew if they passed a law and did the junk that they did in the first couple of years when Biden came in to make the economy look good and do the stimulus and all of the infrastructure deals and all of this stuff, that would be way too obvious. But what they're doing is stimulating the economy, and it just, oddly, it's an election year, you know, and if you want things to look good, why not bring a lot of new workers in, give them money to spend. They don't even need jobs. They just give them money, and then the economy gets stimulated. And you see numbers like what we see all the time. And I really appreciate that, because I have to tell you, I see comments, and I've seen them when I'm on a live stream here. People go, Bob, the numbers are all phony. And I'm like, no, they're not. They're actually not phony, but they are being manipulated through some of the stuff that I'm talking about. And because of that activity, it begets other activity. Right, so we have this environment that we walk around into. I just put an Instacart order in earlier today to get some groceries. I just needed a few things. I mean, I think it was like 14 items. It was $200, right? $215. And so we see all of this stuff that's going on in the economy. And then we look at the rest of the world. We've got Ukraine, we've got Israel and Iran conflict now, and there's just so many crazy things going on. And, you know, I think if you were in, I know I have somebody I know in Dubai, and I know you watch the show every night, but kind of stuck there. There's only a couple ways out. All the airspace is closed around around that region of the world right now. And it's just very, very difficult, I think, to kind of put all this together. So I'm going to come back in, and this is considered to be Macro Monday. So I'm going to go through some other things that we're looking at here. You know, we talk about retail sales, but let's look at the other side of the ledger, okay? New York Empire State Manufacturing minus 14.3. Manufacturing just plummeting again. The forecast was for a minus 0.6, but we got a minus 14. February business inventory is no big deal. April market index is pretty much as it came in, but the housing market is basically where it went to, and now it's stabilized, been kind of stair-stepping down, right? And then we look at something else. Okay, I've got to go through this. I thought about this on the way over. Am I going to discuss this? And I decided I would. Because then we start to look at the other side and some of the other things that are going on. We see Japan trying to get back into a normalization, what we went through in interest rates. We're seeing the dollar soar. We're seeing the yen get hammered. We're seeing the 10-year treasuries plummeting again, all the way. They're hitting these fib target numbers every day. I think, okay, we're going to back up a few days, but we still have these targets. I'm going to go through this stuff here in a minute, but it's just absolutely astounding what we're watching on this planet. I spent probably about an hour and a half or 2 hours listening. I was on a large Twitter space, X space on Saturday when all this stuff was going on, and just listening to the dialogue of everybody and what's happening here. You know, the O'Hare Field was shut down because of protesters. You know, we see the same thing in other places in the country where they're shutting down roads and it's bizarre, folks. I have to say these things out loud. I just, you know, sometimes, you know, you get I will be 72 years old in a few months, and yes, I am old, but I'm very involved in things. My wife's always telling me, honey, don't watch this stuff. But I have to always tell her it's my job to watch this for our community, for our money, for our customers' money, and this is why I do this show every day. And I really thank everybody that's on here. I wish there were more people listening, but hopefully the replay will be good. And all right, that should be a little better. I turned the mic up. Sorry about that. Probably my mic's not close enough. But anyway, as we go through all of these gyrations, then we look at the market today. Nobody was interested in owning this thing. We've seen a complete switch. We're seeing finally the WaveTech Database start to get some movement to the downside on the intermediate. The short term is completely blown out. I suspect today, and I've been talking about this in the Substack letter, is that we're going to see the full liquidation on the short-term database, which will put us down around 12, maybe the lowest that I recall ever seeing that number was around 6%, and that was in 2008. And in 2020, we didn't even get close to that. I think we got about 11%. But that whole 2020 situation was literally a spike and then a return back. So let's just stay here just for another minute or two. I think, yeah, we're about 9 minutes in. Let's just, I've got some other things here that I want to continue to discuss. So the CPI scenario that I played out last night, not only is all the stuff I just talked about as a stimulus, it's also inflationary. And that's why the Fed has been holding back. And I fell into this one. I'm usually really, I've tried to be as good as I can. If there's a misstep in an analysis, I really thought we were at a point where yields are going to come down, the yield curve was going to flatten out, and everything was not going to be wonderful, but it was going to be more of where it was most likely to be stable and to be able to stay in that range and where the economy would function And what we're seeing is not that at all. We're seeing maybe just a little blip in CPI and PPI. But when we looked at that core chart yesterday, in fact, I believe I have it up here right now, and I'm going to flash it over. Yeah, so this was the chart we looked at yesterday. This is forecasting, whether it comes to be true or not, is forecasting that CPI is going to move up fairly strong. And I mentioned this again in the Substack last night, and I think this is becoming very real, and this is potentially going to push everything out of whack from where we thought we were. And kind of just saying those words out loud, I had an old friend that used to always say, he goes, every time I think I got it figured out and I think I know where I am, they change the background on me and I'm somewhere completely different than I thought I was going to be. And that's where we're finding ourselves right now. And it's like, you know, you wonder, the old story, is it real or is it Memorex? I think it's Memorex, folks. I'm not sure anything we're seeing right now is real. And I've supported trading these numbers for a while, and it's worked. Okay, we got a nice run out of those October lows, and now we're coming into something very, very different. And we're also coming in to a point in time where I think more people are awake on this planet than they have been ever. And I think that's a really good thing. But in that is a transition from where we've come from to get here, and the transition going forward. You folks probably know I'm a big proponent of AI. I'm using some things in my business right now that we're working on, trying to put some products together that are going to enhance our process that we've had around for decades. I'm super excited about it, and that is really that's important. And I've been also talking about productivity and all these other enhancements that I think are going to move the economy and mankind forward. And I still believe that. But right now, what we're seeing with all the economics and everything, this is I think Elon Musk maybe said a comment about, you know, this is a simulation. Well, it's sure starting to feel like it right now with some of the things that are coming out, that you're wondering that anything that we've been told in our lives, and I'm a 70-year-old man, is even true anymore. You know, that's kind of how I feel. It's very interesting. So you do have to be careful. So let's segue out of this little rant that I'm on, and let's talk about something that I think I've been somewhat of attacked, but not so much. But we need to talk Tesla. I mentioned Elon Musk, and we're finally seeing some of this stuff that I was talking about. I'm going to bring up a chart here, and this chart that I've got up here is Tesla, and what we're seeing here. And no one wanted to believe me, but I said that no one wants these cars. The rumor is they're going to cut 10% of the, start to do layoffs. And then, you know, you just have to look at the last time that Kathy Wood bought and knew exactly where the resistance point is. But we're finally on the cliff here. This is a monthly graph I have up here, and it looks, you know, I've shown you before these negative numbers, but this is the meme chart pattern that I told you about this before. It goes back to the banks in 2008. These same patterns were out there on many of the banks. We're seeing the same thing on Tesla. All the other electric car dealers are struggling, if not going bankrupt. And you also notice, if you watch regular TV, they don't advertise any ICE cars anymore, only electric. And that's not even working. So this is going to become a big problem. Around 147 is my next target down. And this is just more of this stuff that we've been told that I'm trying to tie together here. This is nothing more, from my viewpoint, is of all this stuff. Everything's going to be electric. We're transitioning, all this stuff. And meanwhile, we're pumping more crude oil out of the ground than we ever had. And ever, and they're trying to keep blocking places where they find crude. So anyway, folks, I think I'm done, but I think what I'm trying to say here for you is that what we're seeing is a lot of manipulation. Maybe the numbers, like I said, the numbers aren't necessarily fake. They are real retail sales numbers, but they are being simulated by government investment into people coming across the border. Not our homeless, but these people that just came across the border. And there's so much I would love just to go through a whole lot of stuff. And in the past I've worried about damaging the channel saying some of this stuff, but it's sometimes you just have to kind of let it out, and you can trust me, I'm letting this out very controlled. And I hope that you folks can appreciate where I'm coming from, because the analytics that we're going to do as we go through the rest of tonight's stream is going to be focused on the numbers, the quant, all the different stuff that we're seeing out there. But there is, I think, this element that I'm talking about. I always say, if I'm feeling this stuff, everybody is, right? It's not just me. And so we're starting to see the market we had over 100-point range on the S&P. I can tell you, I had a really good trading, and I was short around that 12, 13 level, made some nice money. And I've got a project that I'm working on that I had to divert and go and do. And it was like, I didn't want to leave a position on not managed. And so, but it was big. I knew this. I talked about this last night on the markets, that we're going to get probably a rejection just over 5,200. And there were some clear numbers that I talked about. Yeah. Aaron Scott Matthews. I hear you. I can imagine our family's from Uvalde, Texas, and you're probably in Del Rio or somewhere wonderful like that. But all I can tell you is it is really bad. But thanks for listening, folks. Because if you came in late, please go back and watch the replay, because there were some, I think, important things said. So let's get into what we're going to do tonight. And for some reason, it is, we're going from summer to winter, like every other day up here in the mountains in Arizona. So 2 days ago, it was summer. It went back to winter. So anyway, if I sniffle, I apologize. I'm trying not to. But let's go through and look at some of the other metrics. I just want to bring that up real quick here. Make sure I covered everything. So let's talk about tomorrow. Housing starts are coming out. They're expected to be at 1.485 million. March industrial production, it's expected to be at 0.4. That's going to be a number to watch closer than normal. It's typically not that big a deal, but they also have capacity utilization coming out at 78.6. The prior was 78.3. So they're looking at capacity going up. We'll see if this comes out to be of anything. But that number that I mentioned, the industrial production number, watch that, because we saw that big hit in the manufacturing today. But that's what I was trying to paint out. There's two worlds: a retail flow into the economy, which is getting sales and GDP to look fairly good. Maybe for someone who wants things to look pretty good for an election, that's a pretty good strategy, I think, of finding a way to stimulate the economy through people that you don't even know who they are or what they are. Pretty brilliant strategy. Got to give it to them. And then you've got the other side, which is the actual making of things. And there is becoming more of a bifurcation in that area. Okay, so let's go ahead. Let's cover the S&P. I think I'll be able to get through. Yeah. Hey, Terry Wilson, thank you for that. I just a comment here. I watched you, but disagreed mostly tonight. I take it all back. Thank you. Thank you, Terry. Listen, I've always been a straight up guy, so I just try to do things as it goes. And I've been pivoting this channel from going from pure analysis and talking about what's going to happen tomorrow to bringing in a little bigger perspective. And, I'm trying to really navigate this next period of time as we come through here. I would tell you is really going to be critical. I've been talking about we're probably going to decline into May, maybe the end of May. That transition, if we can transition back into a trending mode, then we have a much better opportunity to try to forecast as we come into the election and beyond and what's likely to happen. But like I said, I think I sunk my putt pretty good, and I appreciate some of the, I know I'm actually going to pause this, and I need to clean this up. All of a sudden I'm having major attacks. So we'll be back in just a minute. Stay with me. I'll put some annoying music on for you. All right, I'm back. Thanks for that. Sorry about weather changes, allergies, all that fun stuff. Okay, let's go ahead and let's go to the S&P. All right, we're going to go just a little bit longer term tonight. Sorry for the intermission break there. But what we're looking at, I'm looking at the algos. This is the S&P cash markets, and this is a monthly chart. And it's interesting because we did hit our Fibonacci target that was up here, and we did hit that. That number was 52.19. We went just above it. We still have a couple of numbers here, and we still have an upward slope in the angle of attack from this standpoint. But what we're seeing from the algos, and we're seeing this on a weekly basis, I'm going to go backwards here just very quickly, and then we can get through tonight's video. Basically, we are seeing everything starting to look like maybe there's an intermediate top here, and that expectations and the way we trade the market is going to have to be different. All right, sorry about that. I'm just having a really interesting afternoon here with you folks. So let's go over to let's stair step down. Let's go to the weekly. You can see the weekly has been breaking down. I've been talking about this both on this channel as well as on Substack, is that we're looking at the potential of heading down to the 21 period moving average. And right now that number is at 49.51. So we printed down into the low of, this is cash. So let me, I just wanted you to see the algos. Let's go back to the futures. So I'm so tuned into that. So we're looking at, we did print down on a low all the way to 50.94, and the target is I've been talking about 5,000 is a likely number. So beware, I've said that number out loud. So we are likely to continue down. You're looking at the algos here on a weekly. They're weakening as well. But look where it says we're going to come into a bottom right at the 1st of June. And this is going to be the key area that we're going to need to navigate. And I think some serious money, you should be taking money off the table, at least tightening up stops on positions. I've told you folks that, you should probably have something like WaveTech around. It's like $3.23 a day just for sell signals on stuff that you have working right now, so that you can be putting calls, covered rights, or some kind of buying puts, something against your positions to protect them. I don't think we get much deeper than this 5,000 level on the S&P, but this situation that we're talking about, this bifurcation of here's retail sales and the income side, and then you look at the production side, there is a bifurcation happening. The first time I've seen this for a while, I've been pretty positive on a lot of things coming to manufacturing and all of those type of things. But something is shifting, and we're, like I said, we're seeing our intermediate database start to shift. All of this gradual shift. It's not necessarily a big shift, but I think as we come in to Friday for our database, I don't have it up today, I'll bring it up tomorrow. And certainly, if you don't get the Substack letter, go to there, kendallreport.com/newsletter, and there's a 7-day free trial, and you can sign up for free. I usually do 2 or 3 versions of it every week for free. But the point is, what we're going to see is these numbers start to come down. I don't think we get as deep as this, the 40-week moving average. That's a 47 handle, 48, 47 handle. It is still rising. There is something on this screen. I'm just going to bring this up so you can see it fully. You'll see these green dots that are coming across here. Whenever I see these, this is concerning. This is a 44 handle. This is an interesting situation I'll talk about. Those of you that have the indicators, if you see these things, even on an intraday chart, it's interesting how we start to see the markets roll over, and these end up to be key points. What this is suggesting, that we're going to take away this entire rally. Now, there's plenty of support levels. This is a weekly, so I'm not getting super bearish yet, but I can tell you that the metrics, this is why I'm trying to set you folks up right now. It is going to be important. This period of time that we're coming into is going to be the most important time. I hate to sound like a cliche, but that we've seen for years, because we just printed an all-time new high, but we've printed some big numbers. So one of the things that you'll see me do from a standpoint, I am data-driven, don't want to sound like Jerome Powell, but I am data-driven, and when I start to see these metrics start to move around and I start to identify some of these things, those are the things I'm going to talk about. And anybody's been around me, I've been doing YouTube or some type of writing going back to 1986, but a lot of folks have been around me on the institutional side for since the 2000s, and especially 08 and the GFC, all of that stuff. And I'm pretty good, because of the way our database works, at helping to pivot. But this is an important time here, is what we're looking at, is we're finally starting to see this formation, and it came from that 3-bar trade. If you remember, I told you folks last night that we needed to take out the 5150 level to confirm that there would be at least one more week, and we got that today. We printed way through it, and now the target is the 21-week moving average. That's 49.89. That would be not this week, but next week. But we also have printed something else on the weekly chart here. We have printed down to S3 52.82, and RTX is 50.55. So we got down to, let me just get this number here. We get down to 50.94. So we're pretty much stretched on a weekly basis. But like I said, when I bring the algos back up, you can see everything's basically failing, projecting lower prices. We're seeing crossovers, first, second derivative, PPM1, PPM2 is about to do the same thing. PPM3 actually did it last week. So we're seeing everything starting to roll over. So I talked to you folks about this angle of attack. And this is important because what's happening, we're seeing it roll. We usually will get some kind of consolidation, a right shoulder, and then we get the big hit after that. So we're going to have some time, I think, to get through this. But here's the issue with the things that are going on this planet. And like I said, I spent a couple hours listening into a large space, and there were very interesting people that were showing up and that were quite knowledgeable on the situation that's going on. And you're still seeing the saber rattling between Iran and Israel. And I think quietly the UK and the US are behind this more than they say they are, or that they're saying that they're willing to be. But this type of situation can come apart really, really quick. And that's why I've suggested, and even if you only subscribe for a month or two, to get WaveTech, because you can, at least you're going to have sell signals, see where things sold, see what kind of strategies to put together. And I've been kind of threatening you folks, we're going to do a session around that, and I am going to do something. And if you hang in, don't go in there and sign up for today, but I'm going to put out before. It'll probably, I'm not sure when it's going to happen. Could be Wednesday or it could be the end of the week, but I'm going to have a special offer to try to put this together, because I really think it's important that you protect your assets right now. And I would say if you have questions about anything, you should be at least writing covered calls against them, doing something, protecting, and even downsizing some of your positions at this point. So I've gotten a little nervous that I've seen a lot of these markets, when you start to see these tops form, they can come apart really quick. So let's do, let's go. I'm just looking at a couple of comments here. Yeah, if you read my Substack last night, Lee Bennett, if you read the Substack last night, I specifically covered that crude oil is going to be up probably for the next 6 months, the next couple of quarters, and that, as you know, can really get out of hand quickly. That's going to add to the CPI story that I started in the last couple of days. So, like I said, Substack's $8 a month. It comes out late, just so you know. I usually write it late at night. I like to. I go to, maybe often it's getting finished at 1 and 1:30 a.m. and that's Pacific time. So when that's fairly late, but usually around just after the London Open. I know some folks would like to have it there. So let's go ahead to the NASDAQ real quick, because that was something I was screaming at last night. Get the right button. Here we go. And I may just go completely back here in a minute. I do need to show you folks something. So, but let's just take a quick look. You can see that the NASDAQ is just flatlined here from the PPMs. This is a weekly chart, and we have 3 targets, and I discussed these last night in Substack, is that we're looking at the 3 targets on the downside: 17,129, 16,526, and then we have 16,193. And those are values which would also, I'm going to bring this up so you can see it. I was just talking about this green line. Look at these fib targets. They're coming down towards the 40-week moving average. That's at the 16,500 level. I'm just rounding off. That is definitely where we're going to most likely come into this pattern. I'm going to draw something out for you folks because I always emphasize this particular pattern. So what we're getting is the moving average is setting up a wedge. Now, I'm not a big fan of trend lines because I draw them, but this, and you can see where the fib targets are coming in right here. Most likely what we're going to do is this. We're going to come, we've got enough upward slope here. I don't have the PPMs up, but we have enough upward slope that this should be a support line, which is at 17,578. And so we should have a little wedge that builds here. Market should probably get locked in this range. But if we start to break down below here, now we got fib targets here, 17,129. Next target, 16,500. I'm just rounding these numbers off, which also comes into this line, which brings me to yet another, the way this would evolve is maybe something like this, some kind of pattern like this. And by the time goes along, all of a sudden, this 40-week moving average will be much higher than these fib targets. So ultimately, maybe fib target 1 ends up to be the target. Now, we don't know until we continue to watch how this folds, but this would be the most likely that fib 1, a lot of times we'll hit fib 1, occasionally we'll hit fib 2, and very seldomly do we reach the third target. Typically, fib 1 and 2 are the key targets to watch. But we should get into here, and this can't happen. Here's May. I'm going to draw this up. This is May. So I think there's probably a window of time, depending on what kind of formation we get. I don't know that we get this drastic in the pattern, but let me clean this up so I can show you just a bit. Yeah, so we should come in, into some sort of pattern, whether it's an A, B, C, D, E, some kind of a wedge pattern that comes. We should be ultimately flowing through. And this puts us, by the way, just the way I've drawn it in, doesn't mean it will, but somewhere into we're going to call it a July to September window. If we get below the 21 period moving average, that's the most likely point that we're going to see this market really get into a deeper consolidation correction. And if you look at what I've drawn in here, this is a joke. We're not even talking about getting back to the previous high. So all we're looking at is some consolidation. This is a weekly chart, so this intermediate. So this is what should unfold. It looks like market grid, everything's starting to turn down, and I'll take off all this stuff so you can see it. But actually what we're looking at when we look at putting the PPMs back up, you're looking at everything focusing into July, into that July-September window. So what I'm expecting from the database viewpoint is I'm expecting that we're going to see attrition on the WaveTech Database intermediate down to at least somewhere between 62 and 52, maybe to 48. That would be the most healthy situation because that would give us a big rotation to set up, and that would be very, very significant. So I'm going through a lot of detail here on these markets because I think I want this documented, that we know that it's out there. So tell your friends to come back and watch this. And I would watch, hopefully I'm doing a good enough job explaining exactly all these incremental moves so that you can use this within your strategies and what you're doing. But this is a time to be a little cautious and make sure at least you've got some protection going, whether it's just raising capital or whether it's writing covered calls or whatever type of strategies that you're comfortable with. Let's go ahead. I'm not going to go through Russell tonight. We're going to skip to treasuries, and then we'll touch on crude oil. I think that's worth bringing up, and then we'll do Bitcoin, and we'll move on for the day. And then once again, get the Substack. I'm not after Monday night. I usually try to cover all the markets on Monday's Substack. After that, I just focus on markets that I feel need to be focused on, and I've kind of got a combination between what I'm doing here on YouTube and Substack. All right, so this is the 10-year. I've been talking about these fib targets that have been laying out there. 4.57, that's been hit. We're now heading for 4.78, and then the ultimate is the 4.90. And that's a retest. I've been talking about that would be a retest of these highs. Now, there's something I don't usually reveal, but I want to bring this up. If we go back, way back, when we're in this trough, and a lot of times we'll get these, what I call these islands. So we had about 5 weeks that this was a valid Fibonacci target. That's at 5.55 and 6.17 and 6.57. And I probably don't even need to say it out loud. If any of these numbers were hit, it's game over, right? Everything's going to get reset in a big way. I don't believe that's the case. I do think the potential for a retest of the highs that we made in last October, which set up the October equity low, is possible. And I think what'll be interesting to watch from here, folks, is if we do get this set up and we go a little deeper and we get the correction that I just discussed in the equity markets, then that's going to set up perfectly, because it's almost, you're going to be able to consider it as a divergence, right? The divergence would be, we didn't make a new high in let's say in yields on the 10-year, and the pullback in the market was very controlled relative to the last low. So that should set up a shoulder and then possibly a place to launch from. I'm still reasonably positive here. It really comes down to what we see happen in the next 6 weeks in the WaveTech database, specifically with the intermediate database. That's going to be the big deal to watch at that point. For right now, we're micromanaging this situation. Looks like fairly normal things going on, but anything can happen here just because of the key elements, the drivers in this market are unpredictable, more so than anything. So you could have any type of news you could wake up to tomorrow or even at night. So London opening, US opening is going to be very big when it comes to all of this stuff and what's going on in the world, because those are going to be material points where the major markets are going to be able to, and the major players are focused on, and that kind of splits the world, not quite, but from night and day, if you will, from the US. And so I'm usually up every night. I still like to watch the London Open. Pretty important to me. A lot of things happen there. So this 10-year, I'm going to bring back the PPMs. I've talked about this. What's interesting about this 10-year is that what we're seeing is that the PPMs are starting to flatten off, but even though they're flattening off, they're still in trend mode up. So when we go back and look at this chart here, you still have a slight angle up, and this is going to run us into about, once again, May, the end of coming into 1st of June. We might actually see some peaks. I have no idea, other than the fib targets are out there, and we do have an upward bias on yields that this sell-off in bonds is going to continue. I think we'll do it tomorrow night because I went through so many details. We only have about 15 minutes left in our normal stream time. So, but I'll go through the Dow, and we'll look at the yen. We'll look at some other scenarios tomorrow. And tomorrow's also where we'll cover some individual stocks as well. So let's go ahead and go on to crude oil. So this is just without the PPMs right now. This is a weekly crude oil. And if you look at the values here over on the far right, and these fib targets right now are suggesting 95 bucks. That's fib 1. I just told you that typically fib 1, fib 2 are the valid targets that get hit. We saw that in gold recently where it hit fib target 2 on the weekly and fib target 1 on the monthly. But we're also looking at fib target 2 as 106, which is clearly a retest of these highs out there. We come all the way out over here. The high in June of 22 was 123. So this is basically one of these right shoulders set up. But if you can see, this is projecting all the way into year end. And if this moving average projection, now these are, if this becomes real, we're going to have to each week, we're going to remain above that line to keep that line moving up. Let's look at the PPMs. PPMs are going into this steady mode. And this, one more quick little lesson here is this is in interpreting the PPMs is this is a way for you to look at this. I'll draw this in. This is something I know I flash back sometimes to the pandemic days. This was one of the things that talked about. But this is what we get here. We get these PPMs, more so on PPM 1 and 2. They get in, they peak out, and they typically peak out early in the cycle, and then they get into a maintenance mode. And we're looking at a 1.10 current value of PPM1. I've showed you folks times and time on the probability chart. Once you get above the one whole integer, you get 1 plus, a whole number plus, that puts you into an extended pattern mode. And once you get that, then what happens with all these indicators, they get into what's considered to be like a trend maintenance mode. Now, these are projected values, but this is all of these moving averages are being projected against these PPMs, okay? So that is exactly what it's telling us. Doesn't mean it will happen, but what it does tell us is that those are the projections. And if you've been around for a little bit or you have the indicators, you'll know that these things are really good. And somebody made a comment on X the other day. I like to get in little disputes, and no offense to any millennials, but I love millennial traders that don't have any clue what they're doing. So I like to challenge them. I get a little bit of a troll, but it's a knowledgeable troll versus just being a troll. But one of the things that happens is the algos were absolutely projecting some lower prices. I wrote about it in Thursday night for Friday's projections. We're seeing the same thing here. These projections are going into a very stable mode, but they're at elevated levels that are going to be 0.5, 0.7 plus. I went through these a bit ago. Let me just see if I can bring this over. Yeah, so we're looking at 0.96. This where my cursor is on the PPM, that's 0.96. That's huge numbers all the way over here in March of 2025 is where it finally starts to break down and you start to get into some negative numbers. But we're looking at least the next couple quarters of keeping this slope going. And I think this paints the picture. You can see it's a very steep angle of attack. And if we maintain that, then we're going to see probably at least fib target 1 and possibility of hitting fib target 2. And that's a big number. That's 106 on crude, I think. Let me double check that number. Yeah, 106. So just know that that's what's being forecasted, and it certainly would make sense on how the world is going right now. Fortunately, they don't have to fly crude oil out of Saudi in that area. There's a big exit south around when you come out of UAE and that big channel. I was in Dubai. Actually, it's been a couple of years ago now, but flying out of there, the amount of oil tankers out there I've never seen anything like it. It was like looking at your favorite highway with one after another lined up as far as you could see. And that was at, from 15, 20,000 feet I was looking, so I could see a lot. So, okay, so we'll go to, where are we at here? Yeah, we'll do Bitcoin. We'll call it quits. Let's go ahead and do that. All right, so if you get the Substack, I've been talking about this pattern here, and this is that volatility pattern. I actually thought we had a shot at trying to turn this up, but what we're forming here, let me expand this out. This bubble formation, that volatility formation, we're seeing things start to break down. I thought we would hold, and I wrote about this in the Substack last night. I thought we would hold this 10-period moving average, and we'll go through. I think we could bounce back here, but right now we're looking at that's at 64,140. Last trade 63,447. So we're still within this market grid configuration. If we look at those numbers here, we're looking at 63,890, and then S2 61,819, and then below that, the key number in this pattern, in my opinion, is that low that we printed several weeks ago at the 60 on this exchange anyway. It was 60,760, and I know there isn't a Bitcoin trader on the planet right now that doesn't believe we're going to get a big rally after the halving event. Isn't that in a couple of days? Can someone, if you know when that number is, I think it's got to be in the next few days, right? And, maybe we get a rally off of that number because everybody wants it to rally. There'll be a stampede in there. But it does look to me, I'll bring up the algos again. The algos are rolling big time. And to the point where we're looking at the 10-period moving average rolling over. The fact that we're able to trade under it this week is a big deal. That's telling us that there's some vulnerability on Bitcoin at the moment. And that's going to be interesting to watch because the peak is showing that it's going to be a couple weeks out. But this is how it starts. You'll get a penetration to rally back. And, last week we had a huge outside bar. I'm going to blow this up so we can see it. But this bar right here we made a higher high, higher low. We did close in the lower end of the range. Not really a reversal, but you might be able to argue that it's like a 3-bar trade. I really want the 3-bar trade to be at a high, the highest high in the pattern. This is not the case. But what it's telling us, if we look at the targets here on the fib targets, is we got 59, 224, and 56, 735. So those are numbers that are in play. And then if we look just at a market grid standpoint here, we're looking at the same numbers: 61.8, 59.7, 44, and then 57.829. And those are real numbers that are possible. And then ultimately, the same as I talked about earlier, we get into one of those wedges where we trade between the 10-week moving average and the 21-week moving average. We get some kind of consolidation, and then from that point, we'll be able to decide which way we go. The way the algos are suggesting right now is that we're looking at maybe sideways, choppy into June. Maybe we can get some bounce here, but nothing looks, it's too early to really make the forecast right now, but it's not too early to expect to see more consolidation, more downside in the pattern. And I think the things got pretty carried away over the weekend. Okay, folks, that will do it. Make sure, like I said, get the Substack, and that's kendallreport.com/newsletter, or you can go kendallreport.substack. Either way, it gets you to the same place. And you can sign up there for $8. Try to cover this stuff. Sometimes between right now and when I write the letter tonight, things can change on all these markets. If you recall, when we were watching this together, and even coming into the U.S. Open today, there was a massive rally going on, right? Looked like we were ready to turn around and head up north until we spent about an hour and a half, first 2 hours, market started to consolidate, and then all the talk of saber rattling came on, and folks got very nervous, and that's where we saw the sell-off. So just taking a quick glance here at what's going on the markets here. ES is up 25, 5104, and NASDAQ right now up 4 points, nothing going on here. So anyway, yeah, so we didn't cover gold tonight. Remind me tomorrow. Bring in some stocks that you might want me to go through. We'll go through those things. I already beat up on Tesla. You know, I just want to let you folks know. I hope if you came in late, watch the replay. I'm telling you, you should watch that replay. Watch that first 10, 15 minutes. I think there's some interesting things to think about. If you hate or like what I said, make sure you comment. And the best time to comment is actually after the stream on the replay. So thanks again for watching. We're right at about 2 minutes to the hour. So I managed to get through this thing. Tomorrow we'll be, focusing on stocks and maybe look at some portfolios and see what stuff is starting to swing around. So have a great evening. Have a good day trading tomorrow. We'll see you tomorrow at 7.